Welcome to the Genus video. This is a review of the second quarter ending June. We're sitting here in late July. And Wayne, there's not been a lot of change from last quarter. The big thing is the trade uncertainty is still out there. They talked about a truce that was achieved at the last meeting. What does that mean?
Well, it means they're no closer, I believe, but the talks go on. And I think the Chinese wanted to delay things, as does Trump. And I believe it's probably in Trump's best interest to delay the trade talks and give the American industrial base a chance to get their supply chain out of China. And try and buy time, give his team a chance to move and get diversified.
Yeah, it's so interesting to me that American technology has to now develop a new supply chain outside of China. And how did they let themselves have their supply chain only in China?
Yeah, it's amazing when you sit back and stop and think about it, that there's the whole back of the supply chain is from China. And it's to me, it's almost akin of saying having the Russians in the 50s and 60s be the back end of your supply chain. They're a potential long-term geopolitical competitor, and you should have diversified it better. And I think the administration, the government are now aware of what's taken place, and so I think you're going to see more companies diversify. But it takes time to do that.
Right.
And there's some industries where you can't do it, like the bicycle or firecrackers, for example, or fireworks, but they have to diversify their supply chain. It's just common sense.
And in the short run, that is hurting profits, I assume.
It's going to hurt profits and create uncertainty, and some firms have started doing that already, but it's going to take time. And I think Trump should just play for time here. And I don't think it's going to be a big factor in the next election unless a true trade war breaks out, gets any more aggravated. But I just believe that he should try and buy time, and by time, he's putting the pressure on China. You're going to see capital flow start moving to other areas, and just take your time.
So how big is the downturn in China? It doesn't seem to be that bad.
Well, they're aggressively easing into this, and they also have fiscal spending as well, so they're pushing as hard as they can. But I think expectations are changing within China.
So when you say they're pushing as hard as they can, you mean their central bank is helping out as much as they can?
Their central bank, and they're doing fiscal spending as well. The government's doing fiscal. So they're trying to mitigate this, but I think it's a big factor to push and change.
Well, while we're talking about central banks, let's just talk about the U.S. Federal Reserve, because it's last year, 2018, they raised rates. They are talking about quantitative tightening, and then suddenly, maybe it's my perception of time that's off, but in 2019, they're lowering rates, they're talking very dovish, very accommodating. If there are any problems, don't worry, we'll be accommodating. How come such a big change when really the underlying data hasn't changed that much?
Well, I think there's concerns about the trade war. That's had a bit of a cooling off effect on profits. Well, number one is the bond market and the Fed are very different. Like the bond market's talking about probably 3 more cuts in interest rates into next year. So they're way offside from the bond market, and
just for a second, the bond market doesn't talk. So what you mean is that interest rates in the bond world are predicting the Fed's
going to drop rates at least twice by the end of the year, I would say. Right. And it probably will happen. I think that's why the market right now is at all-time highs. It's saying the Fed was tightening, then they're not going into a period where they're going to lower interest rates.
Don't fight the Fed.
And that's the mantra now. The markets loves that. Don't fight the Fed.
Liquidity.
Yeah, we're going to get growth is still okay. It's between 2% and 3%, somewhere in there, and there's no inflation. And don't fight the Fed. That seems to be the mantra out there right now.
So we have been defensive for about a year. Cut back last August, maybe 5% equities in our portfolios, and we're still in that position. Our signals are still negative. They're certainly a little more positive on the monetary side because of these things, but why are our signals still negative?
Well, we're still feeling, right now, the real economy right now is still feeling the impact of raising interest rates, which stopped like last November. So we're not through with the rise in interest rates and its impact on the economy. And the Fed's been talking and jawboning about cutting rates, but they haven't cut rates yet since They were started talking about cutting rates in February, March. They have done nothing. It's going to happen at the end of this year, at the end of July. So the impact on that is not going to be felt for another probably 9 months. Right. So we're going to go into a bit of a soft patch here, which I believe is going to cause some turbulence. And that's what our models are picking up. Right. The weakness in purchasing manager index and money supply starting to not really turn around yet. So those things are still negative from our perspective, and we need more time for that and more action by the Fed.
And Europe and Japan through this last 2 years?
Nothing, just
same.
Dead in the water, doing nothing. And the concern there is that the central banks have lost complete control. They can't get this thing turned around in Europe. Right. And Brexit's weighing on it as well. So right. That's the concern here, and that's why you're seeing gold perk up right now, is the concern that the other central banks have lost control of this whole thing.
Well, when I talk to clients, anybody you talk to is concerned about just the world, and we seem to be not in normal distribution for our political parties globally, views about many things. And I would recommend, there's going to be in the email a link to a speech by Mohammed El Aran, who was with PIMCO. He spoke at the CFA conference in London in the summer of this past summer. It's about 20 minutes. If you're interested, I really recommend you click on the link and listen to his explanation of why the world seems so out of sync, and he makes some sense of it, so I recommend that. I think we should just finish up with no real change. Our clients are up because the markets are up. We're not aggressive, so there may not be up as much as they want, but we're prepared for the downturn. Wayne, what would make our signals go positive without the market having gone down a lot in the interim?
We need just more signs of monetary stimulus, and it would be one thing, and an increase in the economic indicators.
Right, so we really need an increase in economic indicators.
I think we're going to go into a bit of a valley here, where the PMI is going to go down from below 50 into 45.
PMI being
Purchasing Manager Index, consumer sentiment.
It's a survey that's business people say things aren't good.
So we need some of that to bottom and turn around, and also monetary stimulus as well. So
we got the monetary stimulus, maybe, at least they're saying.
Well, they're saying it's here, but we haven't really seen that. Right now, money growth in the U.S. is around 4 or 5% year over year. It's not bad, but it's not great. But it's, we need more of that. And markets are at all-time highs. We like where we are defensively. We're in a good position, we think, going into the fall season here, which is seasonally weak. Right. So, and we'll see what happens by the end of the year with the signals. So
I think, Wayne, our clients are in the same place, really, they were a quarter ago, making money, but nervous. Yeah. And we're probably right there with them.
Well, the markets are at all-time highs right now. We're going into the seasonally weak area. We still think there's going to be a bit more chop and weakness in the economy, which is going to cause some turbulence. And so we like where we are. And we'll wait, and hopefully come November, December, our signals will be more positive, and we'll have a chance to catch the Christmas rally.
And what would you say to somebody who is well overweight cash? Should they just sit there and wait? If they got a big bonus at work, or
if they're
sold some real estate? If
they're waiting to get money more into the market, I think November is always a good time after you get through the seasonal week period of September, October, and just it's a good time to enter.
Well, Wayne, thanks very much. We will be here next quarter talking again. In the meantime, please give us a call. We love to talk to you, and we'll invest those funds in November.